Assalamualaikum and greetings everyone. My name is Ananasha binti Rozalulai, mention number 288024. We have chosen Gamuda Berhad as a public company listed on Bursa Malaysia. But before that, I will start with the introduction of this assignment. Islamic corporate finance promotes ethical financial transactions, social justice and sustainable economic development. It prohibits the payment of interest and emphasizes risk sharing, asset backing and ethical investment practices. Understanding corporate finance from an Islamic perspective is essential for businesses seeking ethical financial solutions. Financial analysts traditionally examine key financial statements, including the income statements, balance sheets, and cash flow statements, in order to assess a company's profitability, liquidity, and solvency. This report assesses Gamuda Berhad's performance using ratio analysis from its annual financial reports from 2022 to 2023 and identifies strategies to adapt to changing market conditions. For the background of Gamuda Berhad is an engineering, real estate, and also an infrastructure company based in Malaysia. It also operates quarries, manufactures premixes, and also provides project delivery. The company was established on 6 October 1976 and was listed on the main board of the Kuala Lumpur Stock Exchange on 10 August 1992. Furthermore, it seamlessly combines design and execution, ensuring the best functionality and aesthetics. Gamuda Berhad is focused on innovation, integrating sustainability and technology in order to create lasting projects. Gamuda Berhad operates not only in Malaysia but also in foreign countries. This company has three main focuses in the construction segment, which is engineering and construction, the infrastructure concession segment. The third segment is the township development, where Gamuda Berhad will meet changing customer demands and contribute to the community through energy efficient and environmental responsible design.
Assalamualaikum, my name is Siti Nurajah Bemta Rashid and my mention number is 2855597. We determine the company ratio using the consolidated statement of cash flow, financial position and other comprehensive income of the Gamuda Company Berhad. Additionally, the information and the data derived from the company financial statement are valid from August 1st, 2022 to July 31st, 2023. For the analysis financial performance of the company, we calculate several ratios such as the CAR ratio, quick ratio, inventory turnover, gross profit margin and others for the year 2022 and 2023. Firstly, the formula for the CAR ratio is current asset divided by the current liabilities and we get 1.921 for 2022 and 2.235 for 2023. Secondly, for the formula quick ratio is current asset minus inventory and then divided by the current liabilities and we get the answer for the year 2022 is 1.10 and for 2023 is 2.129. Thirdly, for the inventory turnover is cost of goods sold COGS divided by the inventory and we get 5.98 times for 2022 and we get 9.46 times for 2023. Next, we go to gross profit margin. The formula for gross profit margin is gross profit divided by sale and we get 0.222 for 2022 and 0.206 for 2023.
Hi and Assalamualaikum. My name is Nur Enia Adira binti Muhammad Kamal and my mention number is 287064. I shall now proceed with my review of Gamuda Berhad financial performance. Moreover, we use the consolidated data of the financial statement of the Gamuda Berhad company to compute the operating profit margin, net profit margin, return on total asset and debt equity ratio. Operating profit before tax divided by sales is the formula for calculating operating profit margin. Thus, Gamuda Berhad operating profit margin is 0.183 in 2022 and drops to 0.129 in 2023. Next, divide net income by sales to find the net profit margin. As a result, Gamuda Berhad net profit margin climbed from 60.45% in 2022 to 2.36% in 2023. In addition, we compute the return on total asset, which is equal to net income divided by total asset. This leads us to the conclusion that in 2023, the return on a total asset is 0.077, which is greater than in 2022, which is 0.039. Last but not least is the debt to equity ratio, which is calculated by dividing total liabilities with the total shareholder equity. It indicates that in 2022, the total debt to equity ratio is 0.976 and in 2023, it rises to 1.177. That concludes our portion of the Gamuda Berhad financial performance analysis. That's all from me.
Assalamualaikum, my name is Nurhani binti Abdul Manaf with metric number 287679. So for this part, I will discuss about the company's performance. Liquidity ratio measures the capability of the company to pay down short-term debt, which is debt that is due within a year with its short-term asset. Quick and CAR ratio are example of common liquidity ratio. In 2022, Gamuda Berhad shows the CAR ratio is 1.921 and will increase to 2.235 in 2023. This means that the company has more current asset than current liabilities, so it can meet its obligations. Quick ratio also shows an increase from 2022 to 2023, which is 1.810 to 2.129. Second, efficiency ratio consists of inventory turnover and total asset turnover. This ratio tells how effectively the company is using its resource, particularly its asset and and liabilities to generate income. Based on the inventory turnover calculation, the ratio in 2022 is 5.98 and continue to increase in 2023, which is 9.46. Total asset turnover also shows an increase of 0.346 in 2023 compared to 2022, which is 0.242.
Assalamualaikum, my name is Nur Asmani Zati binti Muhammad Ali and my metric number is 286678. Profitability ratio can show how well a business uses its resource to produce profit and provide value for its investor. Based on the calculation, the amount of the return on asset for Gamuda Berhad in 2022 is 0.039 and increased to 0.077 for 2023. The higher value of this ratio indicate a higher capability of Gamuda Berhad to use its asset efficiently to generate profit. This measure the net operating income as a percentage of average asset. It shows the capability of the management of Gamuda Berhad to convert its asset into net earning. While for net profit margin, the percentage reminder increased from 16.45% to 22.37% for 2020 and 2023. It shows the effectiveness of Gamuda Berhad in controlling cost, expense and service price measure of how much net income or profit is generated as a percentage of revenue indicator of a company's financial health. Because the higher the net profit margin, the more money a company keeps. The company capacity to pay down its long-term debt is referred to as its solvency. Solvency ratio can help figure out how much debt the business has compared to owner funds. Based on the calculation, the liquidity ratio for Gamuda Berhad for the debt equity ratio in 2022 is 0.976 and increased to 1.177 in 2023. That means the company show a higher ratio. A higher debt of equity ratio suggests a higher level of firm risk. Concerning its equity capital, the company debt capital is assessed using this ratio. A company solvency is indicated by a higher ratio.
Assalamualaikum, my name is Nu'adira binti Abdullah and my metric number is 287894. The solution that will be discussed is in terms of 4 types of ratio. Based on liquidity ratio, when Gamuda Berhad quick ratio are in a bad situation, this may negatively impact the ability to meet short-term obligations. To improve this ratio, the company should increase the quick ratio by increasing cash reserve and short-term investment and also reduce current liabilities by paying short-term obligations. Gamuda Berhad should also explore short-term financing options and optimize working capital management to ensure smooth cash flow. Gamuda Berhad bad efficiency ratio suggests inefficient resource use and asset management. To enhance efficiency, the company should implement a just-in-time inventory system. This can reduce the company holding costs. Gamuda Berhad also needs to improve the use of asset by streamlining operation or investing in technology to improve the efficiency of the company operation. In addition, companies also need to ensure equipment maintenance is done regularly to avoid downtime. Next, the profitability ratio measures a company's ability to generate profit from its revenue or assets. To increase the ratio, Gamuda Berhad should focus on cost efficiency measures, reducing unnecessary expenses, renegotiating contract with suppliers, and leveraging economics of scale. Additionally, the company should explore opportunities in marketing and branding to strengthen its market position, ultimately contributing to an increase in the profit ratio. Furthermore, solvency ratio. If the Gamuda Berhad have a poor solvency ratio, that indicates a need for debt restructuring or refinancing initiative. To improve the ratio, the company should prioritize debt repayment, consider selling non-core assets, refinance current debt at a reduced interest rate, or defer maturity. Additionally, increasing income through sale growth or diversification and implementing cost-cutting measures can help improve profitability. In conclusion, the evolution of Islamic corporate financial performance based on Sharia principles is to implement ethical transition, social justice, and sustainable economic development. Gamuda Berhad, a Malaysian company, is known for its innovative solutions and contribution to Malaysian infrastructure development. To improve, Gamuda Berhad needs to increase the quick ratio, reduce current liabilities, optimize working capital management, and also increase revenue through sale growth or diversification. Evaluating company performance is essential for decision making, risk management, and strategic planning. It can provide a comprehensive understanding of Gamuda Berhad's strengths and weakness and can facilitate better action in ensuring effective long-term success.